Good day, fellow investors. My name is Sven Karlin and I'm very excited today because I'm going to share with you my largest portfolio position. The company is Amira Nature Foods, stock ticker ANFI, so I'll discuss ANFI during the video. I have been covering ANFI for almost 3 years now. You can read my articles on Seeking Alpha. And I have been in and out of the stock depending on what were my predictions for future earnings. I have been usually right, and now I predict a huge increase in revenues and earnings because Basmati prices in this fiscal year for ANFI have already gone up 50%. The current valuation is 5. ANFI has a price-earnings ratio of 5 for future expected growth of 30 to 50%. That will not stay like this for long. I'll do an overview of the company, check its stock market history so that you can understand why ANFI is such a bargain now. I'll discuss the fundamentals, the risks, and give a comprehensive conclusion about the company and why I think it's a good investment. ANFI is an Indian producer of basmati rice and other packaged foods. Its main product is basmati rice. ANFI buys basmati from farmers and ages the paddy for 12 months, packages it, distributes in India and around the globe. ANFI even has an organic segment. It collaborates with 5,600 farmers, organic farmers in India. So after the hype of Amazon acquiring Whole Foods, if you want cheap exposure to organics, buy ANFI. So 65% of revenues is derived from selling basmati rice, 21% from specialty rice, and 14% from other products like oils, snacks, and similar things. 43% is branded Amira rice and 44% of sales is third-party branded rice. Most sales are done in Europe, Middle East and Africa, 43%, India 41%, and the rest around the world. So by owning ANFI, you get exposure to India, one of the fastest developing economies in the world. You own a commodity, a food commodity, thus ANFI's performance will not be related to recessions or economical environments. Basmati prices, again, commodity, gives you protection to inflation, and rice consumption is increasing in the world as the world develops, especially in India. As I said, ANFI's price-earnings ratio is just 5 at the moment. So if everything is so good with the company, why is its stock price so low? And why is it a bargain? In order to understand that, one must understand ANFI's stock market history. If we take a look at the chart, we can see that ANFI's stock market history is very, very volatile. The company IPO'd in 2012, and alongside rising basmati prices, the stock reached a high of $23 per share. Then the first short selling attacks started. Of course, $23, earnings were only $1, so it was a high valuation. Short play, logical. However, ANFI continued to grow, earnings grew, but the stock price fell to about 15 at the end of 2014. At the beginning of 2015, ANFI was ready to issue bonds to change its Indian debt with global US denominated debt. ANFI managed to get a credit rating from Moody's, and everything was alright. Buyers for the bonds were waiting in line, but then Prescience Point issued a short seller report just 2 days before ANFI was supposed to issue bonds. Moody's immediately retracted their rating and the bond issue fell through. The stock price fell from 12 to just below 10. However, it didn't impact the company's business, so the stock price quickly returned to 12 in July 2015. But then, Prescience Point Research issued another short-selling attack. Didn't affect the stock for 2 days, but Deloitte, ANFI'S auditor, refused to sign the annual report that was about to be published because of the short-selling attack report. ANFI'S management got furious, fired Deloitte, and changed auditor. However, failing to send a timely report in was terribly acknowledged by the market, and the stock fell from above 13 to 2.5 in less than a month. New auditor, the financial statement eventually came out, and the stock price went again back to $14 at the beginning of 2016. In March 2016, this time not a short seller, but yours truly, wrote a report estimating that because of declining basmati prices, revenues will decline and earnings will turn negative. I was correct on the revenue decline. Revenues declined 20%. However, I was not correct on the fact that earnings will turn into a loss. Earnings declined, I think it was about 33%. Revenues declined 20%. So I was correct, but very positively surprised by the fact that ANFI delivered positive earnings and managed to operate positively during the slump in basmati prices. However, that didn't affect the stock positively, as the stock has been declining slowly for the past 12 months and is currently trading at $4.85. In the meantime, during these 5 years, the company has been constantly growing, doing its business, selling rice around the world, lowering its debt to EBITDA ratio, lowering its debt to equity ratio. So all good news. And all that good news is now about to come out to the world. There are several catalysts that I want to discuss. The first catalyst is basmati prices increased by more than 50% in comparison to basmati prices in 2016. The financial statement coming out in July 2017 for the fiscal year ended in March 2017 will still have old basmati prices, but the management has announced a conference call and that it will issue guidance for the next fiscal year. In the next fiscal year, since April 2017, basmati prices have risen from an average price of $795 per ton in 2016 to an average of $1,200 for the past 2 months. So that's an increase of 50%. I expect very positive guidance from the management at their conference call. So positive guidance, growth in revenues, growth in earnings, that's the first catalyst that should positively impact ANFI'S stock. The second catalyst for ANFI is that ANFI managed to weather low basmati prices, many short selling attacks, remain up as a business, stable as a business, while its competitor KRBL in India increased 20 times. If you look at the chart, KRBL increased from a price of 24 in 2013 to a price of 400 Indian rupees. It has a price-earnings ratio of 23. If ANFI would have a price-earnings ratio of 23 at current prices, the stock price would be around 22-23. At forward estimated earnings, ANFI'S stock price with a price-earnings ratio of 23 would be around 36, 37. So the potential for ANFI is huge. The difference between the Indian competitor and ANFI is that one is traded in India and the other is traded with Wall Street. The only explanation I have is that the guys on Wall Street understand much better the basmati market than the guys in India. Another positive catalyst is that ANFI was one of the 14 companies approved by the Chinese government to export basmati prices into China. ANFI has also been expanding in Germany, made an acquisition, made a distribution agreement with Rewe, that's a national retailer in Germany, so everything has been going very well for the company. And another point is that ANFI initiated legal action against the short seller, Prescience Point, won the case and settled with Prescience Point. The short seller removed its reports from its webpage and ANFI can now operate in peace. Given the seriously ANFI approached the short seller issue, I don't think there will be any more short sellers attacks. And the last catalyst I want to discuss is that for the first time since I'm following the company, the management will participate at investors' conferences. The Jefferies Global Consumer Conference this Tuesday, June 20th, and the Oppenheimer 17th Annual Consumer Conference on Wednesday, 21st June. When institutional investors become aware of the bargain, emerging market exposure, get confidence in the management as they have been doing pretty well in the last 5 years, with no actions against minority shareholders, it would be rational that we say goodbye to single-digit prices for ANFI forever. Fundamentals. ANFI has very strong fundamentals, as it is one of the few companies in the whole stock market that has managed to grow equity at a compounded rate of 15% during the last 4 years. ANFI's current book value per share is $6.84 and just 4 years ago was $3.94. There are of course also some risks as with any company and it is very important to discuss them. ANFI has 200 million in liabilities. That's a pretty large sum for a smaller company. However, liabilities have been declining in the last 2 years. At least they have been stable in the last 3 years, and the debt to equity ratios has been declining from 1.4 in 2014 to the current 1.01. Another risk that I need to mention is that ANFI has 190 million in receivables. That covers the debt, but people prefer cash than receivables. Me too. However, the top 5 customers amount for just 25% of those receivables. So to conclude, we have a very exciting second part of 2017 coming up, starting this week with this video, the investors conferences that ANFI'S management will attend, positive earnings report coming out at the end of July, extremely positive guidance due to higher basmati prices, and then in November the first financial report with higher basmati prices. I really think that all these positive things will be enough for ANFI to say goodbye to single-digit prices forever. So my target is to see ANFI at 15. If there is euphoria about the growth and prospects, the price might go even higher. However, at 5 and at book value of 9 next year, I see it as an extreme bargain with a margin of safety with a very high potential return. Thank you for watching. Please share this video with your friends, colleagues and fellow investors. Put your comments below. I'll answer all the questions if you have any doubts. And please subscribe if you like this analysis, as there will be plenty more. Thank you.